Hello, investors and traders. What is up, everyone? My name is Mark, and this is,
Hi guys, this is Mo from OTB Clubhouse.
and you are watching Money Market Truth. I was about to get the name wrong. So hopefully you guys are doing well. We got some breaking news we want to get into real quick. But first, we just want to make a few announcements. First of all, if you're brand new, thank you so much for stopping by. We really appreciate it if you guys subscribe. And if you enjoy this podcast, please share it with some friends and other people who are interested in investing and trading. And of course, stop by on our weekly podcast. We got one more coming up next week. Mo, do you want to tell people about that one?
So our goal's always been to bring professionals when it comes to talking about finance. We don't bring any furs. So the next person that's coming, we're gonna start exactly the person and the name soon. So follow up with that. But they are financial planner, and at the moment, I believe they're managing 50 million funds for other people. So it's a pretty big deal, and they're very successful at it. And they're going to talk about how does investment work. We talk about trading a lot. We talk about this thing can do 100%, 200%. But when you look at things and how wealth has grown, it's by investing. And they will talk about how they take an entire portfolio and how they grow it. And I think that's going to build in a lot of patience in people after watching it. And you're also going to see a difference on how people like Mark Monroe talk, people like Q talk, and the new guests talk. They don't talk like YOLO, FOMO, $1 million tomorrow, subscribe for the culture. That kind of crap we're not going to ever do. We're invite those kind of people. And Mark, it should be fun.
Yeah, and then also we've got some additional breaking news. That will be our last podcast for the year. Is next week's podcast with a special guest. We're gonna basically take the next couple of weeks off. I'm gonna be in Europe. Mo's got family stuff and Christmas and the holidays. And then when we return, we're gonna do 2 episodes per month. So every other week. It's not gonna be every single week, due to the fact that I'm busy. I got kids. I got family. I'm also an investor. I've got my YouTube channel, and Mo is an active trader, and he's got a mentorship. He's got other people that he has to take care of. So we want to come together and just bring you better quality and more value than you were getting before. That way we have 2 weeks to prepare to drop some gems, essentially. So definitely stay tuned for that. We're going to definitely work on being a lot better starting next year. So that, you got anything else you want to add there, Mo?
Well, I think the meeting today, the timing couldn't have been great. We got 3 days of dumping, Friday, Monday, and Tuesday. And a lot of people now on Twitter are just bearish. They're just bearish. And I don't think we are done yet. We might get a little bit of a rally. We'll talk about it later. But what I keep thinking, and I think why a lot of people are getting screwed over, is when things start running, they start buying. And when things start selling, they start selling. I think what you need to do is be in before the move actually happened, because options, you are paying more when stuff goes. And if you are late, either late bear or late bull, you will pay a lot of penalty, and you're going to take very high risk, low reward trade. We'll talk about that today. And I think that's why I said the timing's very, very good, because whoever gets in now, I'd say about December 6th, another 2 week period I would give or take. You can land in some really good and easy plays. We'll see. We'll see though. Today should be fun.
Yes, and if you are brand new, like I said, make sure you subscribe. But I'm basically the investor. I cover like the investing side of things. Mo covers the trading side of things. So we kind of have like a mixed balance. But a lot of stuff when I talk about when it comes to investing, it's really looking more on a short-term basis, meaning within the next year. Because clearly we can just say, hey, buy and hold for 5 to 10 years, you'll be fine. That's just the easy way out. And of course, anybody who does that knows that the S&P 500 typically goes up. Of course, unless we're in a bearish market for several years. But let's get to some hot takes first. First and foremost, hot take, I want to talk about myself here real quick. Actually, on, was it yesterday? I actually posted this on Twitter. If you're not familiar, I am a Twitter bear. I mean, not Twitter. I'm sorry, Tesla. I'm a Tesla bear. They're basically the same thing at this point. Elon runs both of them, but I am a Tesla bear. There's a lot of red flags that I'll look out for with Tesla. I'm not saying it's a bad company. I'm not saying that it's the worst investment. I'm just saying that I feel like it's extremely overvalued. I feel like there's a lot of red flags you have to look out for, and I feel like the price is going to go down significantly. My target for the end of the year was 165, which you got close to. I was off by $1. Mo, what is your target for Tesla?
It is $100. I think we get 150 by end of the year. Yeah.
Yeah, and you were saying as far as what, $60 in the next year, you believe that Tesla will go down to, right?
Yeah,
Yep.
65.
Yep, and I agree with that sentiment. Obviously, I know some people are like, "You crazy? You guys are smoking crack." It just is our opinion. We've been relatively consistent with this, and we've hit pretty much all our price targets for the past 6 months since we started the show. But anyways, this was actually one of the red flags I had was that Tesla uh, it's basically that they're doing some cutbacks in Shanghai with their factory. Well, come to find out that was actually fake news. It showed up on Bloomberg. I reposted on Twitter. One of our friends, the other Mark, actually called me out on it on Twitter. He was like, "You do realize this is fake news, right?" And I didn't realize it at a time when I posted it because it was like early in the morning. And I was like, "Oh, okay." So I looked into it, and sure enough, that was very much fake news. So that's actually not happening. But that was actually one of my red flags. One of the concerns that I had with Tesla is the fact that there's going to be a slowdown in demand, especially in China and Germany. We've got a bunch of energy issues going on right now with Germany. One of the countries, I think it was Sweden, or it was one of those European countries, they're already trying to pass a bill which will limit the amount of energy consumption that each person is using throughout the day because they're already short on energy and everything's so expensive. And that includes EV vehicles. They're actually telling people, please drive your gas vehicles and don't utilize your Teslas. And Germany, just again, I'm from there. I kind of know how the culture is. I don't think there's going to be such a massive demand as Elon believes. And the reason why I don't think China is going to be this huge giant factory that's going to have this massive demand is because they got their own EV vehicles they're trying to push forward. So we'll see what happens from there. But I just kind of want to call myself out on that one because yeah, it was I was 100% incorrect about that. Now, moving forward though, we do have some breaking news. I don't know if you heard it. This is right before I got on here. Did you hear that Trump's lawsuit? The Trump organization actually was found guilty on all charges. But it's funny because I was looking on Fox News. Is it anywhere to be seen? Yep. Hold on. All the way down here. There it is. Go to CNN. Headline news right there. Boom. Right in the front. Trump organization convicted of criminal tax fraud. That just shows you like how our political landscapes are here. Mo. It's like one side is just like, let me stay quiet about it. Let's put a little marker right here. But on CNN, let's put it on the front page. So that's happening right now. So for everyone who's not familiar, this does not mean Trump himself has been found guilty on any charges whatsoever. It's his corporation, it's his business. He was found guilty on pretty much tax fraud for the most part. I wouldn't say that it was like 100% like not paying bills. He was just taking advantage of a lot of the tax codes, and he was writing off a lot of stuff that he shouldn't have written off, like bonuses for people who were passed off as if they were consultants that we didn't have to pay taxes or pay that much taxes on it or whatnot. Vehicles, condos, all those stuff were like written off as like tax benefits versus what it really was supposed to be counted as income. So there's a lot of like shadiness going on within the last 15 years, basically taking advantage of the tax code. And that's the reason when he was running for president, he didn't want to share his taxes because I think people would have seen that right away, that he kind of, took advantage of these loopholes that were in the system, which most politicians will do anyways. But we have that we have an individual there in, I think it's I forgot the name of it right now, but she's after him in New York, and there's actually some criminal charges against Trump as well in the civil court. So they're trying to sue him for $240 million or something like that. I don't think they're going to win on that basis, but this doesn't look good for Trump, which means now like moving forward, it's going to be hard for him to make a lot of deals, at least the Trump organization, unless he just completely closes it down, files for bankruptcy, and moves on and starts a new company or something. But this looks really bad for him. And that just happened a few minutes right before we went live. So I just wanted to share that with y'all. And yeah, so let's get into a topic that I want to touch on real quick. Taiwan Semiconductor. Now, earlier this week, I posted something about TSM, and everyone knows that Warren Buffett basically started buying TSM. Did you hear about that, Mo?
No.
Yeah, Warren Buffett started. That was like the only chip sector, from my understanding, that he added into his portfolio a few months ago. So when he filed his 13F, people saw it, and they were like, "Oh my God, he's got TSM in there. He must know something." And of course, clearly he did. When he bought, the stock did go up because I think it was in the 70s initially, and then it ended up running up to the 80s. And then early this morning, right before the market opened, it said that the TSM is set to invest another $40 billion in U.S. manufacturing. So if you're unfamiliar with what's going on here, obviously we have a shortage in the chip market, specifically everything that's made overseas, right? So we don't really have any major factories here. Intel's trying to build their own one. During the Trump administration, they were trying to pass the CHIPS Act, which will give some great incentives for any American manufacturers to start building their factories here so they could produce their own chips. That being said, once that was never officially passed, it never made it all the way through until Biden finally came in. And then he made some tweaks, which meant, and the tweaks that he made was essentially that anybody can come out here and start building, which is the reason why TSM is here. It's not American companies, obviously from Taiwan, but they're building and investing a lot of money here in some factories. They believe, I think it's like 2023 or 2024. But I'm going to play this video real quick, just trying to give you guys a little info on TSM. And I'm going to tell you the reason why I believe TSM is a little bit safer than AMD, NVIDIA, Intel, MU, and etc. We're going to go over that here in a second, but let's watch this video.
FY, there's no audio, Mark.
Audio?
There's no audio yet.
Oh, no. Okay. So, well, I don't know how to work that. So my bad. Anyways, they're just basically breaking down and talking about what their thoughts are on TSM building their facility here. So with that being said, on Twitter, I did post this right here, and I'm going to share this with everyone. Can you see this, Mo? I'm going to pull it up. All right. So this guy you guys should definitely follow him. Is App Economy Insight. I like him. Mo, you're the one who actually introduced me to him because you always like post his little graphs, and I'm a visual person, a visual learner, and it kind of showed you like the Q3 results. And I look at AMD, right? It shows you like how much money is coming in, where the money is being spent, and what it's basically ending up with, right? This is the reason why AMD end up tanking afterwards. Now, of course, there's some other stories to it, the fundamentals, like where their outlook and et cetera, but it kind of gives you exactly what happened each quarter. So this is AMD. This is Intel, ugly, of course. NVIDIA, net profit, 0.7. TSM. You see it's significantly different, right? And if you're not familiar with TSM, they produced it. Oh, Jesus, what is Siri? They basically produce AMD and NVIDIA chips as well for Apple. So to me, the reason why I like them more than anything, not only is Warren Buffett actually investing into this, obviously he sees something, he probably knew about this whole intent to actually build this factory, but this also has a dividend as well. So for all the dividend investors out here, it's not bad. I prefer the price in the 70s, but this morning when they announced that they were going to build this factory, I was under the assumption that the stock would start skyrocketing. I even made a post. I was completely wrong because again, typically when people spend money, Mo, what happens?
Investors get nervous because we're heading into a recession and these guys are about to build a factory. And also, I'd like to add, TSM is not a safe play just because Buffett's buying. It's the same whole Cathy situation. If China decides to attack Taiwan, this is most likely the most sensitive stock. And Buffett is not foolproof either. Like, I don't know if you know, Charlie Munger lost a whole bunch of money because he invested in China. Same thing with Ray Dalio. These guys are wrong all the time too. Just be careful.
See, Mo, you're supposed to agree with me on this. This is how these podcasts work. When you have two people on, you're supposed to agree with one another. No, I'm joking. Yeah, so you disagree with me on this statement. No, I agree with you 100%. Obviously, it's Taiwan. We got issues with China. The reason why I was saying out of all of the chip manufacturers, I still prefer this one out of the other ones, especially on the financial side of things. Yes, of course, if there's something happens with Taiwan, it's going to get really ugly for this stock. But clearly, they're trying to build some stuff over here. So within, I think, 2024, they should hopefully have the factory up and running. So things can significantly change long-term for TSM. That's the reason why I'm interested in it. But like you said, Mo disagrees on that one. He thinks that's not a good investment, correct?
Yeah.
So, and I think it is a good investment. So definitely do your due diligence on this. And I want to go over the financials real quick, just kind of show you. Again, this is simply Wall Street. I've talked about it multiple times on this channel. I'm going to put the link in the description. This is completely free. You can look up about 20 stocks each month for free if you want more. you got to pay, and it's like $20 a month or something like that. And it kind of goes over all the price to earnings ratio and et cetera. And I kind of want to show you here, this is like the earnings revenue. Hence the reason why they were doing really well. If you look at like AMD and NVIDIA, this will look completely different. You keep going down. Yeah, like it's basically dummy proof. It shows you its earnings ratio versus its peers. You can see it's at 14, where the average is at 29. NVIDIA is at 68, which is crazy. 21, 18 for Texas, and Qualcomm is 10. Going on further, current PE ratio, fair PE ratio is at 19. And I always like to look at this, the share price versus fair value, what they value their stock at and what they think is like a fair value. And they're saying that a fair value is at around $71. I actually, when I looked at the levels, if 79 doesn't hold, I think it will go down to 60. That's where I saw a support as well as the demand zone. But this is kind of giving an idea of what's undervalued, what's overvalued, and what's about right. And currently it's kind of at that about right. So not saying to go buy it right now. I'm just showing you. As for the cash flow, everything's increasing significantly moving forward. In the past, it was looking a little bit sketchy a couple of years ago in 2020, and then it started kind of taking off, and it's slowly increasing. Go further down. Past performance, it kind of gives you the check marks. All 6 of them are good to go. And again, looking at the free cash flow, it's looking relatively good. Go down even further, it shows the assets versus liabilities, short-term and long-term, also looking good. Got that 3 check marks. So reducing debt. TSM's debt to equity ratio has increased from 14% to 31% over the past 5 years. As you know, they've been increasing significantly, especially since 2020. And then it shows you the dividends. Go even further down, which I also like to take a look at, is the insider trade, selling and buying, and nothing has really been happening for the past 12 months. And I also like to look at this as the ownership breakdown. 47% is owned by the institutions and 45% by the general public, which is relatively good. And then it kind of gives you the ownership of everyone. Again, I'm not telling you to go out there and buy it right now. I'm just saying what I like out of mine. Again, we are not financial advisors. Definitely do your own due diligence. I'm just saying what I like about TSM, and if I had to invest between AMD, NVIDIA, MU, and et cetera, I prefer TSM, not just because of Buffett, but it also has a dividend. Just look at the financials. I like it. Overall, of course, the risk is the fact that we could get into some conflicts with China, clearly. But overall, just as a company, I like it. And I did buy some shares today at $80 because I was expecting it to run up. It did not. Like I said, I stop limit at 79. If 79 does not hold, I do expect it to go probably to 60. And that's probably where I would buy. But it is, again, the biggest risk factor that I see, like what Mo mentioned, is the issue with China and what's going to happen with that. But for long term, I like this one over all the other ones. They're more like growth stocks. And right now we're not in an environment of growth friendly, just period. So what's going on? So yep, that's pretty much all I got on TSM. Anything you want to add there, Mo?
I think a lot of people are just getting out of China as well. Apple is planning on opening a factory. I think they might go to India or Vietnam.
Right? India, yep.
India, yeah, one of them. And I think they're like kind of worried about what China's doing. I don't know if you guys know, China's building camps. They're locking apartment building. Something really funny happened today, and I've never seen that. I saw this in 2020 around March. They started buying Moderna and all these PFE these companies that make vaccines, calls 210 for Moderna, 220 for Moderna, like heavy. And then came puts heavy for cruise lines. And I think there's something coming. I have a feeling it's something to do with China. There's a reason why all these news are coming, where Tesla wants to move to Texas, Apple wants to get out of China, and we will find out soon why they're building camps and why they're building these bunkers. But any of this stuff, it's not getting highlighted in the media as well. The news isn't talking about it. There's a couple of people that I follow that are only posting about China stuff, and even their stuff gets flagged and removed. So keep an eye on, something's coming. I honestly, the last time I saw such big sweeps for Moderna or PFE, it was COVID wave 2. I don't know what comes now. But I don't know if you've noticed, Mark, a lot of people are catching the flu, like a
Dude,
lot of people.
I mean, I told you how many times I got sick this year, right?
Yeah.
Like I mean, I've been getting sick nonstop, dude. I was sick again. I just got over something a couple days ago. Ever since I'm not saying that this is the reason why. I'm just saying ever since I got the vaccine last year, I have gotten sick multiple times within that 1 year period. And I'm a dude who never ever gets sick. I'm relatively healthy. I always take vitamins. I'm always working out. So it's been very strange. I've been getting sick. So I would not be surprised if something else is coming or another version or whatnot. So, but let me ask you this. Do you feel like, so you're putting TSM in the same category as like Baba and Tencent? Is that what you're doing?
Yeah.
You put it, okay.
It's the thing is, man, when it comes to what is it called? SWOT analysis. The threat on this, like when you do a SWOT analysis on any company, so if people that don't know, you look at strength, weaknesses, threats, and opportunities. The threat column is big enough that anything else doesn't make any sense. I had the conversation with Q about China stocks, and I'm like, China stocks looks really good, and he's like, I wouldn't touch anything
I
within
agree.
China.
Yep.
And look at it now. Basically, like fundamentals don't matter. Like I was thinking, hey, Baba, everyone's buying stuff from China because of COVID. Like look at Shopify, but Baba wasn't moving like it should, and that's investors pulling out early. Someone always knows something, and they start selling, or they start taking profits, or they just start getting out as fast as they can when they find out. I think TSM, all these good news, it's giving them liquidity to get out. But again, like look at Bill Ackman, he was wrong about Netflix. Sold it at the bottom, shot up. The Munger guy, Charlie Munger, who else? Ray Dalio. It so
They've
many
all been wrong. They've all been wrong at one point or
yeah,
another. For
Kathy
sure.
Woods, like I think she's staying wrong. They've been all wrong. Her tweets make no sense anymore. She's just fighting with random people on Twitter saying that, oh, you don't think the growth. It's no one saying the growth's not going to happen. It's like a building's on fire, and this person is like throwing more stuff at it, saying it's going to go at it, but the building's on fire. And maybe 20 years down the road, like things go back, but some of these stocks will never come to what they were. Do you remember about I reposted an article that I made a reel from 6 months ago when Apple announced they were doing layoffs in July,
Mhm.
and that's I think me and you were the only people I would like to say on any podcast that were saying that don't buy anything. Recession is coming. Be careful. Majority was saying buy Apple, buy Shop. This is how
Mhm.
you hedge
Yeah,
against
by the
inflation.
dip.
In my opinion, how I would hedge against inflation is buying gold and silver. That's how I would, if I really wanted to. I would at this point buy a 1 year treasury bond yield, and so it's a little bit safe. Better than cash, you get 3.54%. That's what I would do. I will not go buy Apple at 140 and then it goes to 100. That's not called hedging. That's saying blocking your money when you need the most.
No, Mo,
Um,
that's called buying the dip, bro. It's
yeah.
your dollar cost averaging, dude.
So that's the stock market.
Yeah.
Crypto nightmare. I don't know if we should talk about it before crypto billionaires have died suspiciously. I don't know if you've
Oh,
been
yes.
watching.
No, yes. Definitely talk about that. That would be a great hot take to have as well. But before we do that, again, make sure you guys subscribe, please, and give a thumbs up. And let us know, do you agree with my thesis on TSM, or are you lean more towards Mo? Definitely put it in the comments below and let us know what your thoughts are. So, because again, this is one good thing. Me and him don't always agree. You know, you see a lot of podcasts where people just kind of agree with one another. We have two separate mindsets. I like TSM, he doesn't. So we'll see. But yeah, can you pull up something? Do you have anything on that story, or you want to just talk on it?
We'll just talk about it. I don't want to post a bunch of pictures that might trigger people, but there's some very visual pictures out there. But I don't know, man. What something's going on here. And the person who died, I don't know, remember the name on the beach. This was yesterday. Just before his death, he posted on Twitter that
Mhm.
CIA is
Yeah,
after
it's
him,
after.
and they're telling his ex-girlfriend to blackmail him and all that stuff. Did you read that article?
I did not read it. My wife is the one. She's like, "Hey," she's like, "Did you hear about this crypto guy? He just got killed. He just and a few minutes before that, he was talking about how like the CIA was after him." And I was like, "Is his name Sam Bankman?" I was like, is it the FTX guy?" And she's like, "I don't know." That's who I thought it was initially because of all the involvement he had with all these politicians, which was both on the Democratic side and the Republican side. There was a lot of dark pool money that he had given the Republican people, according to what he said. So, but Bro, this is crazy. I wouldn't listen. You messing with people's money. A lot of powerful people have been putting a lot of money into these crypto companies and stuff. So, but that's
Everything,
all I know
bro.
about it.
So on Monday or on Friday night, we saw the biggest order we've seen, I believe, this year. One person bought $1.3 billion worth of Apple share on Friday night.
Mhm.
They should be down close to what, about 10, 15 million right now. And let me pull this chart here.
All right. Do you want to share it? There you go.
So this is how the sector performed today. Is there any way to zoom in or
Yeah,
like
here I could do this, and then
perfect?
if you just zoom in a little bit with your on your screen, if you zoom in a bit, it should zoom in even further. I don't know what you have. Do you have a Windows or a Mac? You look like a Windows guy.
No, bro, I have an iMac.
I don't just mess with you.
Okay, so it's fine. Let's just look at it. So these are all the sectors. The only one that finished green was XLU, and the amount of puts that came in for this thing, everything got hit hard. Like the biggest sweeps I've ever seen in my life were for XLF. They were hitting BAC all the way till 25. We had BAC puts for December 30th for 54. They went up about 250%. And they came out with the news that BAC is saying that Bank of America might buy back shares, but
Yep,
the
I
stock
heard that.
was still tanking. And that's scary. XLC was down the most. If I click on it, you're going to know what's in it.
Of course.
Oh,
Go
guess what?
ahead.
It's the top one.
Isn't it? It's Facebook, isn't it?
It's Meta right on the
Meta.
left.
Yep. Yeah. Man, I'm never gonna catch a break on Meta, man. All I could do is just do a few trades here and there. I made a 40. I think it was 40% on Apple or Meta last week.
You
I
did
did a
Meta.
call.
You texted
Yeah.
me.
Okay. It was Meta. Okay. My memory's shit.
Meta's in it, Google's in it, Netflix in it. They were selling Fang heavy, and that's basically a big red alarm. When you're selling UPSTs, no, it's you know what, it's high growth, people losing money, get it. When you're selling stocks like Apple, Meta, Google, Netflix, Roku, massive sweeps came in as well. It tells you what people are doing. Massive, massive exit happening right now. And I'll tell you what happened. A lot of people don't know this, but funds, they like anyone, they like to follow trend. And if you read any good book, my favorite one is Market Wizard. About 11 authors or speakers, they all say that the most money they've ever made is if they when they followed the trend, and usually they didn't do it personally. They had algos that would do it, so it just takes all the emotions out of it. The most money they've lost is when they get creative and counter trade. That's them, not me. And they were managing 300 to 400 million. So let me just throw in the SPX chart and quickly show you guys something.
Yeah, real quick. So you just said that XLF isn't doing too well, right? But weren't there like a lot of gurus saying that this is the time to put money into banks,
Yeah,
right? Because the
we
interest
covered that 2 weeks
we
ago.
did.
They were saying
Yeah.
buy Goldman Sachs.
Yeah. Be careful, y'all, when it comes to banks. So me and him definitely agree on that.
Here, let's add a 200, and I'm going to show you something. Hey, Cavo, how you doing, bro? Okay, so let's go daily. And can someone tell me what was the 200 on SPX on a daily? Again, this is moving. So it was 40.50, right? 40.54-ish approx.
Mm-hmm.
There's something called, and you're going to see, you can Google it. It's called CTA buy level, CTA sell level. This is what funds buy and sell. They've got algos program. So one of the CTA level is 200 moving average. Once we get over this, you're going to see these solid green bars because they're buying it, right? We went all the way to 4,100 and we started selling. The moment you get under 40.50, the algos sell it because they're following the trend.
Mm-hmm.
Now, if you are a human, you probably would be like, okay, let me see how high this can go. But algos, they just buy and sell, which is why a lot of funds have lost a lot of money because we've touched 200 twice now, and we go a little bit over and then we go down fast because once it breaks it below, it starts selling hard too, which is what you're seeing in the last 2 days. A lot of people are saying it's a tax loss selling. My opinion is, and I've gained this after losing a lot of money and making a lot of mistakes, when things happen, act on levels rather than thinking why it's happening, because your brain will form a reasoning, smart or stupid, it doesn't matter. We as traders or even investor, we want to make money. We don't want to be there questioning. We're not analysts, which is what a lot of people on Twitter and YouTube are. People on YouTube that are giving advice, they're not actually trading. They're doing this for entertainment. We had this conversation.
Yes.
Yes, Malik, you got this. But if you want to Google that term, you should be able to get the levels. It's the easiest ones are moving average 50, 100, 200. So if I change this to 100 now, look at where we're at.
Right on it.
So this is, we got into puts at 40, 30, 40, 22. I sold it. I saw they started buying again. So as long as we hold this, right? As long as we hold this, it shouldn't get any worse. The moment we get under this level, we get another sell. Well, let's look at what the next 50, where's 50 at? We are at 38.22. So that's the second level that you want to keep an eye on. A very high likelihood that we lose this level soon. I wanted to touch a very important topic, and I want to be completely humble about it, because a lot of people think that they're smarter than people like Tom Lee, Kramer, even Kathy, right? I think a lot of these people are amazing and brilliant. They've got 25, 30 years of experience. Why are they consistently wrong? One reason is, and me and Mark talk about this a lot, if I'm holding, let's say, $10 billion worth of fund and I'm invested in Meta, do you think I'm going to come out and say Meta's garbage after it's been down like 40% when I didn't think the recession was going to happen? One core mistake now is costing them. They can't admit to it and get out. That's very key. So do you think Michael Saylor is stupid for holding Bitcoin or not saying Bitcoin's going to go down? He cannot say Bitcoin will go down. If he says people will sell, and he will get margin called. You need to understand, when someone's giving an advice, it impacts them somehow. And if it doesn't, then it's more believable. So if Mark says buy TSM, do you really think Mark will benefit if you bought TSM? Do you think his share prices will go up or something like that? No. Like, but if I'm holding and I have 2-3 million followers, it does happen. Another thing I want to talk about it. Sometimes a lot of these smart people work for a lot of funds which tell them to say a certain thing because they're trying to exit. I don't care what you guys say. If you tell me Jim Cramer is wrong every single time purposely, or he's just dumb, this guy was owned a hedge fund. I seriously think this guy is providing exit liquidity every single time for someone. There's people that have been trading for a year or 6 months. They know better. So just be mindful of who these people are and why they act in a certain way. If they messed up, unless they've sold it, they're not going to admit to it. Bill Ackman bought Netflix and then literally sold at the bottom and said he made a mistake. Was he holding it, he wouldn't have said that, because if he said that, everyone else would get out. So that's sort of like how I think you have to be very careful what people are saying, and you might assume that they're stupid. I don't think they're smart. I don't think they're stupid, but I think they're doing it in a very unethical way, and which is causing a lot of people a lot of harm. There's so much we can talk about, but there's a lot of people that took a lot of people to the ground by telling them to buy the dip, because people weren't dollar cost averaging. What people were doing was taking money from their savings and just throwing at it because they remember 2020. And so I see a lot of that on Twitter, and that's kind of like, they're not real traders, they're entertainers. They're either trying to sell you sub or just create a brand based on what builds the most engagement. If I opened up this podcast saying I'm going to start with giving you 1,000% play, it would have a lot more engagement. But eventually, long term, and depending on how long you guys take to catch on, the engagement goes down. So who was the guy that you talked about? Meet Kevin.
Yeah, you know what? I could pull this up actually right now. That's what I was just typing, and that's funny because I was literally thinking the exact same thing. So Meet Kevin is one of the most popular YouTubers in the financial literacy space, 2 million some followers. He started his very own ETF fund. Yeah, and this to me is kind of insane. Again, this is a love-hate relationship I have for the guy, but out of like to give him the respect where it deserves, the guy is definitely a hustler. The guy definitely knows how to make money. He made a lot of money off of YouTube, clearly, and real estate. But if you look at his long-term track record for stock picking, hasn't been too good. In fact, majority of the stocks that he picked are down anywhere between 70 to 90%. And this guy end up buying or not buying, end up basically getting his own ETF now. So he has his own ETF. It's called, and I think it's a joke, Long PP. That's the website, longpp.com. And the ticker symbol is PP. So this has to be a joke. It just has to be, but it's a way for him to obviously also have some tax write-off benefits and trade without having to get hit with some of these tax implications. And if you look at his actual expense ratio of this PP, it's 0.77%. That's slightly under Kathy Wood's ARKK. A lot of innovative stocks in there. Not only that, majority of it is in Apple and Tesla. And I don't know what funds. Do you know any funds, Mo, like legitimate funds who are majority in only 2 stocks?
No, man. That would be anyone who started trading in 2020. That would be their fund, basically their account, which is close to zero.
Yeah,
I wouldn't call it a fund. It'd be a garbage can now, but
yeah, this is the same guy who's like, I mean, he made most of his wealth. Most of these YouTubers, especially the really popular ones, they make most of their wealth off of Tesla, the Tesla bull run. So, but yeah, so that guy has his own fund now, and he did a video on it. I remember seeing it went public. It was at $19. He did a video on it, and it could have been an error. I'm not sure, but it ended up running up like 38% after he dropped his video, and now it's back down to like 20 some dollars. But I think that was an error. It was like after hours or something. But yeah, I would not suggest to invest into this guy's portfolio. Why would you? The guy doesn't have a good track record. The good thing about this is, though, you get to actually physically finally be able to see how he performs. Does he outperform the market or does he not? I would pretty much bet that he probably will not outperform the market.
I don't think big funds aren't outperforming the market. That's where I think a lot of people will lose money trying to be smart. And that's why these funds are losing money, because we got like another 24 days. And Tom Lee, which is a very smart guy, like these guys aren't someone who started trading 2 years ago. Tom Lee's probably trading for over 25 years. He's telling you, go read his tweet from yesterday. He said that he still thinks this market rally has room, and he still think we can do 4,500 to 4,800. Why wouldn't he say that? You tell me, why wouldn't, if all your money is stuck in a fund and your customers and clients are crying, do you think he's going to say we can go to 3,300 or something? Go look at what the analysts are saying, which have no incentive. What's that guy's name? Mike? Do you know the name of Morgan Stanley's chief analyst? I forgot the name. Hold on. Let me tell you guys so you can Google it. Hold on 1 second. His name is... Hold on. Let me just quickly... Mike Wilson. Mike Wilson said that, and that aligns with a lot of different analysts, said that by the 4 month of the year, which is April, we should be 3,000 to 3,300 for SPX, which is exactly what I have in mind. But we'll go back to the charts and I'll show you kind of what I'm thinking. All right. So this is the daily chart. You got the levels 38.40. The problem that I see with bears getting crushed here is the moment we got around 39.30, buyers started buying. They stepped in, right? So unless we break 3,900, I don't think the bull rally is done just yet. And this is why I tell people, be very careful if you're late to the party. If you're late to a bull party or a bear party, you do not want to be late. I know a lot of people that swung puts, weekly puts overnight. I don't think it's smart. I don't think swinging calls is smart. I think you wake up in the morning, see where we're at. If we get over 39.50, we have legs to get to 4K. So just know that that's where we're at. Seasonality wise, we usually run up all the way till FOMC, and then FOMC decide. What really, really triggered me, Mark, was Pavel flipped scripts. The last time this guy was like, we're not scared to over tighten because we have tools to ease things, but we
Mm-hmm.
are not going to be early in terms of quantitative tightening. But last session, this guy was super like chilled out. We got this under control. And that's why the market was rallying. We've erased all the gains after his speech. My worry now is come next week, we've got CPI on Wednesday and we've got Powell speaking. If CPI comes lower, which I actually think it will, I don't know if you've noticed stuff's actually starting to come down. Car prices
I
are
have
down.
not. I have not noticed. I wouldn't. No, I have not. I'm not looking at a car though, so I don't know. But like, just
You talking about grocery shopping?
yeah, I still think grocery shopping and even like Black Friday. Believe it or not, I went out to Target and I mean it was pretty sad, but everything seemed to be a lot more expensive than it was the previous years.
Okay. Fair enough. I think it'll come down, and I think if it does, it can rally the market. And on top of that, if Powell says that we are keeping things under control, we can rip. So you have to be very careful with these weekly and monthly puts. My opinion, March, April is the safest. But I get it. Like if you're a small account playing with $500, you don't have an option of going April. You're going to afford one contract. Then you day trade. Then you look at QQQ. You look at levels. That's how you do things, right? But that's kind of like how I would look at things. So okay, so let's talk about some potential possibilities. So let's look at a 1 hour chart. Supply and demand. Let's see. So we've got a supply, which means this is kind of where the sellers might be sitting at. Uh, the top range is 4,000. Bottom range of this is 39.90. This is where I expect we can get to by Wednesday, Thursday. But if you're smart and if you're a fun, you're trading, what do you want to do? You want to be balanced before the meeting starts. You're not going to
Mhm.
balance on Monday. You want to balance now. So you're going to start seeing chop, which is why I think folks should stay away from weekly. And my biggest problem with Twitter, and I think Mark's is too, people's mindset gets ruined with the kind of stuff that get introduced to. I don't know if you guys have ever been to a new company for a job and stuff. They're going to try teaching you all the good stuff because they want to build your core, right?
Yeah,
That's what they want to do. Imagine you as a new trader, you an investor, you go on Twitter and all you see is 500% and 1,000 and a guaranteed. So this is how it starts. Hey guys, I have a 2,500% play. Retweet. This is my Discord subscription. Click on it. What you've done here is mentally rewired your brain to think that that's the norm. But Mark, is that the norm?
it is not. And if you don't believe it right then and there, they hit you with it's for the culture. For the culture, y'all. It's for the culture. Give me that money. But yes, no, it's not realistic. It's so far rare in between, and that's one of the reasons why I wanted to talk about some stuff here later. I know we're way above time, but this is our show. We do what we want to do. But keep going.
So that's like when you have a new kid, new job, new school. The goal for us should be to make sure your core is built, that foundation's built. A lot of 2020, 2021, and 2022 traders have the worst foundation you can possibly imagine. And they are living with so much anxiety and fear when they shouldn't be. So I think new traders should stay away from weekly, maybe a month, maybe two, maybe 3 month out, and your focus should be learning the execution process rather just going crazy. I'm done. I'll let you add whatever you need to, and then I have lunchbox as well. I have a
Okay,
plate.
yeah. The only thing I want to touch on real quick too is if you decide to go trade and kind of do what Mo was doing, there's this tactic that I don't see too many people talk about. So, like Mo said, if you get 3 to 4 months out, for example, and let's say you're up 40%, you can roll your position back down and take profit off the table. That's the way for you to do if you're only a one contract gang member. So, because ideally you would like to have multiple contracts so you could shave off. That's kind of what you do, Mo, right? But if you only have one contract, I remember you telling me that you were like, dude, why don't you just shave off some? And I never thought about that. I'm sitting here doing cover calls. I was like, oh, I could just roll it back. If I got the position in January, I'm up 50, 60%. I could take $200 off and roll the position down to a lower strike price or earlier time and still be in a position, but I took money off the table.
So let me give you an example. So what Mark is saying is, let's say Mark took a 120 meta call, and let's say he paid $200. So this guy's up, let's say 50%. So his premium is $3. He only has one contract. What most people do is they go YOLO and then they'll hold. What he could do is, instead of a 120 call, he could sell the 120 call and buy 125 for 2. In that case, he's taken 100 back, and he can say, I will cut it at 150, 170, whatever his risk tolerance is. It's called rolling.
Yes, correct.
And you do that when you have limited contracts. Rather than rolling, better is scaling. So what I like to do is I like to take heavy risk right off the bat, because I like to buy a support. Once the play goes green, I have a lot of advantage, because I could just start scaling back and making the trade free. The disadvantage of that is if it goes against me, I'll lose a big amount, but that's my trading style. I know a lot of good traders I know and respect, they average up. I don't do that. I just take risk beforehand, and that's how I do it.
Yeah. And the only thing I want to touch on before you get into your lunchbox there, Mo, is the conversation. The year's coming up. The end of the year is about to happen here. And this is for all the investors out there. Start creating your investment plan, and don't rely on other people's investment plan. I know in the beginning of my journey, that's kind of what I did. I always ask, like, hey, what are you doing? Like, what do you do? Like, how does your portfolio look like? Are you mostly tech? Are you diversified? Like, what are you doing? And I would just kind of steal from other people. The better I got, the more I start realizing, like, I need to create my own trading plan and investment plan. And the reason why I'm saying this is, like, I know, again, right now, Mo, do you agree? Yes or no? This isn't the environment right now for growth.
Like, what do you mean?
Growth stocks.
No, I wouldn't be investing in growth right now.
Correct. So that's my point. So in a lot of these stocks that we were investing into in the beginning were growth heavy or have like a lot of room to run. I'm not saying that this isn't a perfect time to start buying some of these growth stocks, because a lot of them are down like 80%. All I'm saying is that you're better off honestly waiting until you see a clear direction and reversal. We talked about this before. Okay, this right here, if you see a stock, this is going up. It looks like an escalator, or steps, actually, escalator straight, steps. You see it going up. That's buying a dip when you're in a bullish market and it has a slow, small dips as it's climbing up. Basically, what you saw from 2020 all the way to close to the end of 2021. That was a bullish market. You buy the dips there. Unfortunately, if you're not good with like support and resistance or supply and demand, just look at the trend. What are we seeing right now? We're seeing a lot of this. We're seeing higher lows. That's what we're seeing. Higher lows, higher lows. It's going down. It'll go up, down, up, down, up, down, higher lows. You want to wait for higher highs. Once you see a clear direction of higher highs, that's really where you kind of want to start buying these individual stocks or growth stocks that you're interested in. Sure, you may leave 10, 20, 30% on the table, but it's safer than you losing 10, 20, 30, 40%. That's my only issue sometimes when I see people saying, buy the dip, buy the dip. Well, what you could do is also try to look at your investment plan and start looking at sectors beyond just tech. A lot of us are stuck on tech. I understand tech is the future. But there's so many stocks that so many people didn't talk about. And I think I've mentioned them before on this channel that are outperforming the market right now. Like, had I paid attention a little bit more, like, let me look at my bathroom. Procter & Gamble's been doing pretty damn well.
Dude, look at energy. Energy kills
energy. Dude, energy's been killing it. Pepsi, look at Pepsi. I mean, it's sodas and chips. It's outperforming the market. Look at WWE. Look at Hershey Kisses. There's so many stocks out there that's not specifically tech that have been outperforming the market, but we're so focused on just one thing, tech. And because of that, a lot of us got our lunch eaten. So what I'm encouraging a lot of people is make your investment plan and decide what you want to do. You, as a 20-year-old, may not have the same investment plan and appetite like I do in my late 30s, early 40s, right? You might be okay with investing $40,000 in Palantir or Tesla or SoFi in your 20s, because whatever, $40,000, you get that back when you're in your 30s. But when you have a family and you're looking for the future, you may not have that risk appetite for these crap stocks that are down 80%. You may want to lean more towards the Procter & Gamble, the PepsiCo, and maybe a couple of ETFs, and then maybe just like one or two growth stocks. if you're in your 50s and 60s, do you really want to risk your entire life savings in Palantir right now? Or would you rather invest into just a SPY? So you have to kind of sit down and really have a conversation with yourself, and every single stock that you may be interested in, if you're not like an ETF person, which I still first and foremost believe everyone should probably invest into ETFs or indexes like SPLG, SPY, VOO, invest into those first, and then maybe dividend stocks. But if you were at that age, the 50, 60, are you really going to take your life savings and YOLO it on Tesla, which is volatile? You're like, well, everyone likes Tesla, sure, but are you going to do that? Or are you going to invest into something that's safe, or dividend stocks that give you somewhat of a return? Because a lot of these dividend stocks have gotten beaten up pretty bad, but to me, this is a great opportunity to buy some of those. But just try to look on the outside and don't just follow these trendy stocks or these folks who just like tech. Make your own thesis, make your own portfolio, listen to what you need to do. And every single stock that you do analyze, look for the negatives as well. I love Amazon, for example. I have Amazon shares. I will likely still continue to invest into Amazon. But when I looked at the earnings, what was it? About 2 billion came from actual Amazon sales, and 5 billion came from the AWS, right?
Yeah.
But what did we see in this last earnings? AWS is slowing down. So has Amazon peaked? Are we just trying to milk the last little bit that we can out of it? Or are they planning on pivoting? So you have to look into these type of things too. Look for the red flags. Don't always ignore the red flags, because I really believe that Amazon's probably going to drop even a little bit further, especially with the stuff that I know right now, because I'm not ignoring the red flags. And if it becomes to the point where I'm seeing earnings after earnings after earnings, where it's just like the interest in AWS is declining and they're not pivoting and they're not changing it up, I'm going to get out of the Amazon position, because at that point, I think we exerted as much as we can out of Amazon. So look beyond that, because I see some of these gurus like Amazon. I mean, you shop at Amazon every day, right? So why not invest into Amazon? Well, Amazon made most of its money off of AWS, not selling products. So you got to look deeper into that. Don't just follow blindly. That's my rant to that. That was it. Start preparing your investment portfolio.
All right, let's do this quickly. This is the play I'm in. I will happily disclose my position too. I usually don't do this, but I have a separate project going where I tell people, and with a screenshot, what I'm buying, how much I'm buying. So I don't mind. I have about a starter position, 25 contracts of CCL February 17th for dollar. I have 35 contracts, sorry. $03. So $103 or 104 is my average. I've never seen flow this big on this thing. And if we go look at the daily chart, let me just clear everything and everything. So let's look at this chart. So what I see here, and most people should look at it, is we see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 days of pure consolidation, okay? These are pure consolidation, which means there's a big move coming. I'll just draw a really ugly trend line so you could see it. You could call it a bear flag. You could call it consolidation. I say this consolidation, and we sort of broke this consolidation, but I'm here for a long time on this, not a good time. I bought enough time on this February, so we got about 2 months, 2 good months. We had close to 2 point something million dollars on this line, which is February 17th for $105 for strike price was 9. Apologies, I didn't give you the strike price. So it's a put for 9. I think the next levels are this one here. And then if this one fails, 855, you got 768. And if we break 766, you have a gap here. And after the gap, there's nothing till 611. And the OI, so just so you know, 17,000 on that line came in. Tomorrow it gets updated, probably goes up. I was playing around with options profit calculator. If we get to 856, you'll be up roughly 25%, 100% here at 768, and close to 400% here. Yeah, so this is what I'm talking. I'm not saying follow me, do whatever. this is the trade I'm in. I can, if anyone is like, yo, you're paper trading, you didn't, let me know. I'll send you the screenshot. I sent the screenshot in the Telegram chat today, no problem. When I'm disclosing it, I don't mind. I could do it for everyone. That's what I have. But this is what I mean. The risk reward is there for this. What new traders are doing? Okay, so the flow is for February. Let me go for next week out. Don't do that. The flow is for February. The person that is adding, they're not stupid. There's a reason why they're adding it. We coming with our small money, we need to, in my opinion, follow them. And once the premium starts jumping up, you're going to see what happens. I'll give you a quick example and then we're done. A lot of people think that you need to play 0 days and weeklies to scalp. If you've got a good amount of money, and I don't mean like 50K, I mean 2,500, 3K. Today we scalped XOM puts, and alerts were there, Mark, you can verify. XOM puts for $2,500 for 2 hours to make $500. Would you take that trade for 2 hours, 25? It's not a lot of money. It's only 20% profit, but it's $500. Most people don't make that in 2 days working a job.
Yeah.
All right. So the stop loss area, very good question. Let's clear.
Yeah, I wasn't sure if you saw that question. I was about to ask that. Good catch, Mo. Look at you multitasking.
So $10 what is so about 70 cents. And that's why I told you I added a starter position. One thing I want to tell you is I watch the flow and how often it comes. Every single time we saw any retracement on this, more puts came in, more puts came in. Same thing happened with XOM. Same thing came with BAC. That's why I think there's something going on. They were hitting cruises for puts and they were hitting Moderna, PFE, BNTX for calls. But I'm going to stop talking because we're over time, but that's my play.
Cool. Yeah, that is where I'm actually in a cover call on Norwegian cruise lines that I've been milking since June. So I have noticed it went up to like $18. Now it's I think at $15. So it's fine. Please go back to $12.50. That way I still keep the shares. So, all right. That was pretty much it, everybody. Yo, everyone, seriously, thank you for showing up. 25 people. That's awesome. Trust me, that means a lot. Thank you so much for tuning in. We see you guys next week. We have a special guest. We're going to promote it on our personal pages. You can find me at Trading with a Dummy on Instagram as well as YouTube. Definitely subscribe there if you haven't. But first, subscribe here. And Mo, where can they find you?
You can find me. My Insta is OTB Clubhouse and Twitter is OTB Shark Mo.
Oh, yeah, I'm on Twitter too at Trading T.W.A.D. Dummy. So I'm trying to be more active on there. I'm actually kind of liking the Twitter these days, man. It's not because of Elon. I'm just kind of getting the hang of it. So just be clear. But yeah, other than that, I don't think we have any other questions or anything. So everyone, thank you for tuning in. And we see you guys next week. Peace out.